Markets around the world are going absolutely ballistic, but what does it mean for us as traders and investors as positive gamma takes hold and some of the positions that we've been discussing start to hit their first targets? In today's video, we take a look at what's going on when it comes to the most important market sector in the world and what it means for us, along with what's happening in yields and whether Paul Tudor Jones could be correct about bad times still to come. Yes, join us today, guys, as we go through stocks, commodities, and cryptos to discuss one of the rarest and best breadth thrusts that we've just seen. A lot to go through. Let's do it right now together. Well, welcome back, everybody, to The Daily Show. My name's Tom, and in today's video, we have a lot to talk about. The latest macro, the big data, the key levels, and of course, what just happened in semiconductors as big announcements with chips being sold to overseas come through. Just before we get into some of the biggest information in today's video, I want to announce that we do have a free Sydney event coming up on the 4th of June, which is in the links in the description down below. If you live in Australia and you're able to make it there, we're sharing some information we've never done so on the channel, and I think you guys will enjoy it. Plus, we've got free drinks, so what have you got to miss out on? Meet some of the members of the community, and of course, it'd be great to see you there. So let's start off with the big story here, which is Paul Tudor Jones, and he says that the stock market will hit new lows even after the Trump reduction in tariffs. So of course, is he correct? Well, in today's video, we'll take a look at what this could mean if we're looking at a very similar period to some of the other US presidencies. But mostly we have to go with what we know right now, and that is that we are seeing breadth thrusts across the board. The De Graaf breadth thrust triggered over the last 24 hours, and this couples with the Zweig breadth thrust for some very nice stats indeed. According to Subu Trade, 3 months and 2 months later, we're 100% of the time up, and generally markets are up pretty decent percentages when this occurs. But is it everything smooth sailing? Is it all fantastic? Well, as you can see here, guys, we've got the latest data when we tend to see this particular read. And a lot of the time, the next 1 to 2 weeks, they can be a little bit more sketchy, but it's actually the next couple of days where you can sometimes see some sell-offs. Now, so far, the markets have not shown any signs of this. And even in the worst case scenarios after a De Graaf indicator had actually gone off with a Zweig one, we only usually have dropped at max 12%. You might say, well, only that's 12% happening in 2022. Yeah, but generally speaking, if you look at the next 252 days, up across the board. So what's the average here? Somewhere around 5. And that, of course, will just wipe us back to where we were at the start of the week. And the most important indicator, which is the 200 daily moving average. So let's have a look at the good signs. The first up one is the advanced decline line going to a new high. Obviously, this is really strong, and it tends to be symbolic of a market that's actually coming into a major recovery. And of course, when the NASDAQ 100 also closes above the 200 DMA after 7 weeks within that range, that is usually a good sign. Notice you get a lot of positive stats here for the next 2, 3, and maybe even 6 months in particular. And I think that's what we want to focus on here, because as we know, we still do have tariffs across the board. Now, you might see this blurry screen here and say, what am I looking at? Have I just gone blind? Well, no, you haven't, guys. But the big thing here is this is a share from Seth Golden. And I like it because what it shows us is that when the markets recover after a sell-off like we've just had, they tend not to be in a bear market just yet. In fact, even if we were going to the worst case scenario one, which was in 1957, after the market returned 16% and then sold off into a bear market, this is now the only one that's ever gone this far. So we've never seen a bear market turn off this particular sell-off. Now, that doesn't mean that we can't hit an all-time high in the future and then ultimately end up in a bear market, which is kind of the way I'm thinking about it. And obviously one of our base case scenarios at the start of the year, which was a 10 to 12% sell-off. Yes, we got more, then a recovery, then lackluster results near the all-time highs, and of course, potentially some structural damage. But one thing is for sure is you usually do not see a market enter a recession when everybody thinks it is. And according to the latest polymarket data, we can see here that recession is dropping off like a rock. So we're seeing 51% to 41%. We've got Goldman revising. We've got Yardeni revising. Everybody is changing their tune since we found out about the China-US, obviously, trade deal to bring it back down to more substantial, more sustainable levels. Although we know that, remember, this market is kind of being held artificially for a few reasons. Tariffs eventually do damage, even if they're being held at 10%. It just takes time, generally at the earliest 3 to 6 months, and obviously usually more on the longer side, even upwards of 1 to 2 years. But the other problem is buybacks. And you might say, why are buybacks an issue? Well, we've got no spending in the future, which is the capex spend. We've already shown that that's dropped off at a cliff and probably will continue to do so. But all the money's been flowing into buybacks, at least for now. And this makes us wonder, are we seeing a similar event to big presidencies that made substantial changes? You can see here Trump's current period in office obviously dropped the market so far like this. But notable ones over here, we had FDR, we had Nixon. These ones actually all recovered to all-time highs predominantly and then dropped later on. Could we be heading for this type of thing? What do you guys think? Like down in the links in the description down below, because of course, this is the argument. What has happened to market structure here? As the markets fell off the way they have, are they showing us signs of really bad stuff, especially after we had those 2 yield uninversions late last year when the Federal Reserve started to pace those rate cuts? Another issue with this is, of course, that we're buying the dip. Yes, retail traders have been the number one purchaser, and in many ways, the street might be wrong here. While retail has been going at a flow that we've never seen once before, 21 weeks of consecutive massive buying, the highest since 2008. At the same time, we've seen institutions actually drop off, more so at around that 5,600 level. So you've got to remember 5,600, 5,660, which we spoke about here on the channel, that was a level for the markets. The reason we know it was because, of course, we saw some large activity. But on top of that, we actually saw smart money start to drop off a little bit. Then the announcement came over the weekend with the US-China deal, and it's possible the street may have missed out on this. So, of course, have we seen the 98 narrative break? Well, we knew that we would probably get an all-time, a new high based on the Fed announcement last week and the trap that we mentioned here on the channel together. But at the same time, we're still ripping higher. And that certainly, along with the breadth thrust, may have killed this narrative. And it may mean that we're in more of the 96 narrative, which is, of course, this pretty strong recovery that's a dull or V-shaped style recovery after we go through this point. Now, this is the other one we've discussed several times on the channel, and it looks like this is currently the most likely scenario. However, we'll talk about a key indicator later on that does show where we probably will end up, and it's not so bad if you are looking to buy the dip still. Percentage of stocks above, as you guys know, if we're led by infotech, we're led by semiconductors, things look really good. And boy, oh boy, are semiconductors flying with this most recent news of course, chip deals being done with Saudi Arabia and others. In terms of dark pool trades, yeah, we got a large trade here. It's only one notable trade. I didn't see too many others. A couple of large stock ones, Nvidia, Tesla examples, when they're hitting these resistance zones, but nothing to really write home about. And most importantly, no change in trend, okay? So we're just not seeing any change in trend yet when it comes to market action. But one large trade coming through there on IVV, and also notably solar getting a large dark pool here in terms of trade. It's been selling off for a very long time. Has it finally hit its bottom? With earnings coming, we've still got Alibaba, we've still got Walmart, we've still got Cisco, we've got plenty of big earnings. Just remember, if you are trading them and with options, be aware implied volatility is a key. And the reason it's a key is because if it's expected to move plus minus 7.5%, you buy an option, it moves down, let's say 6%, and you had a put and you think you're going to be in the money, you're probably not going to be, because the market has already priced in that. You've actually paid for that implied volatility. When it comes to gold, one of our favorites on the channel, obviously we've been very bullish on gold for a long time. Everybody turned bullish on it in May, which is when we actually stopped being so bullish on it. And the reason was because it had that massive FOMO event. Just remember, we're kind of like in a FOMO event right now in markets as markets rally off this news. Usually speaking, there's an opportunity there. Remember, if Wall Street, which we already know was probably downselling themselves a little bit at 5,600, 5,660, then there's a decent chance that Wall Street will want to get back to that price in the future. And we'll talk about why that is in a moment. But yeah, long China tech, man, that fell off fast. I'm still a believer in long China tech. I think it's going to do quite well. And of course, yeah, you can see there that it's a pretty non-crowded trade in terms of the bull side. Gold to silver ratio, silver still holding better against gold, which we've talked about several times. And in terms of the last 24 hours, we got those inflation numbers and they came in okay. So we had between, I think it was like 0.25 something was the expectation, which was rounded up to 0.3. We ended up getting a 0.2 number rounded down, and we pretty much were realistically on what we expected. Food at home became cheaper. Food away from home was more expensive, and shelter was the sticky one, where we saw, of course, another rise in shelter. And boy, oh boy, shelter has been such a big problem in the US and continues to be so. No one looks at it, no one cares, it seems, but it certainly is. I feel for people that are renting out there. I mean, you guys must be paying some absolutely ballistic numbers. Let me know where you're at and how much it's. Is it ballistic? Is it the worst you've ever seen? Let us know in the comments down below. S&P 500 on a rally. Obviously, a lot of gaps now left behind. And the key here is going to be 59.50 now that we're continuing to rally. We spoke about in our live stream for our private community, links in the description down below. We still have no signs of bearishness since breaking out through that Monday. We did have some, of course, overbought signals here with a couple of positions, but then came the US news. And as we know, the driven market by news, luckily for us, may be partially over. And that means it's more technical now because, as we know, 10% is kind of the baseline tariff. I don't believe those 90-day things are not going to be continuously rolled. Most of you guys seem to agree. But you'll notice here, this level becomes very interesting in the future. The daily 200 sits there. We've got the anchored VWAP, the 20, the 50. I mean, we're going to have like every moving average and so many different fibs sitting on top of these things. So certainly a level to watch in the future. And speaking of which, do we have a sign of any dumping yet? No, the market has come back down to this kind of 58.75 level where you've got a little bit of support from the previous session. We sell off that, we could go down to 58.50, which is the options low level today updated. But you'll notice the options high level is actually sitting right on the call wall. So let's have a look at the call wall together. And the first thing here with the call wall is the S&P 500 5900 level. Wowzers, look at that. Absolutely massive amount of calls coming through at 5900. And then, of course, 5950 and 6000 become the next big strikes as we move forward through to the OPEX of this month. Now, this is a pretty big deal because this week is massive options expiration. So on top of all of this, it's just this massive gamma squeeze that we've been seeing the last two sessions. And that's come through NVIDIA, hitting into 130. Obviously a massive level for it. You can see the call here on 130 is huge. And then, of course, 135 opens up, but it's just calls all day. You can just see here the market rallies, the market goes positive gamma, it goes ballistic. For Tesla, 350 could be the next target. 330 was our first target. Well done to anyone that got that. Well done, guys. See a few of you that messaged that today. But 350 is still the major call wall. And that would line up very well with that 5950 as well, 5940 on the markets. So will we see all of this? 135 NVIDIA, 350 Tesla, and then maybe that level on the S&P. So just before we jump into the charts and have a look at all the key levels we are watching right now, I want to just thank the sponsor of today's video, which is Tiger Brokers. Now remember, Tiger have special deals for many of you guys in several countries around the world, and links down below. But one of the big things we want to discuss today is options. And the reason why is, of course, options have been a huge position in 2025, both from a hedging side and also an opportunity side. And with Tiger Trade, US stocks 24/5, there's even more opportunity out there. So let's take a look at the platform and see some of the cool tools that you could potentially take advantage of. All right, so one of the things with Tiger Brokers is obviously to be able to potentially trade the different markets. Now you can see here we've got Tesla and we've got analysis, financials, and all these different normal fundamental tools that you can go through. But what about options, calls, puts, expected, implied volatility, and all the different strikes? Well, you can see here on the mobile platform, it's so easy to get access to all of these types of things. And you can see things like intrinsic value, IV history, etc. One of my favorite things to do though is the IV ranks over time. I love this particular tool. It's something I've always liked. And what it shows you is it shows you that whether you're paying a lot of premium or not based on historical averages. You can also see call put ratio was there. And of course, the ability to open positions is as easy as just a couple of clicks. And you can go through delta ranges, option strategies themselves, and of course, your idea. And it makes it a little bit easier when it actually tells you whether you're wanting to go bullish or bearish in terms of the position. Sometimes it can get confusing. So what are you waiting for? Check out the links in the description down below if you're interested in Tiger Brokers. And of course, you can check out their options trading platform. All right, well, let's take a look now at the overall market in terms of the lead indicators. It was another pretty okay session for high yield junk, but the big watch was the US 30Y, which hit 4.95 straight after the inflation read, but didn't stick it. And this is continuing to be kind of the bear case scenario. It hasn't pulled the trigger and nothing's wrong here yet, but we know there's something weird around 5%. So we're obviously watching it. I've reset the alert here a little higher, and we're waiting for a potential close up there. Now, again, that would want to be timed with price action structure and ideally some form of actual signal saying that we've hit another resistance or some other change of trend or dark pool, but it's something to watch. When you're looking at options yields, though, continuously going down, and this is, of course, continuing to be an absolute banger of a read when it comes to picking out lows. You can see here everything changed around the 9th of April where we start to see drop off. And by the 15th, really, the options market inside of bonds was saying, you know what, nothing to be concerned about for now. They'd smelt out, of course, the tariff discussion. And basically, the trend of this year has been tariffs go on, everything sells off, tariffs go off, everything buys up. And I mean, that may continue to be the truth of the news so far. Dollar index, what's going on? We can see here the dollar is still in a bullish breakout from that inverse head and shoulders. Hasn't completed 102.50. Certainly worthwhile something watching, but I'm particularly watching gold because you can see here it's still struggling around that 3,200 level. And the thing with gold is that, and silver, is if they do break under some of these key zones, then it could get kind of nasty quickly. Now, silver, we do expect to hopefully hold better than gold, but you can see it's still trading around these ranges. So yesterday went up, we ended up hitting 33.18. We hit the resistance, we sold off. This is now a level that we need to set alerts on, so make sure you've got alert above that. And the market is currently trading around that most traded zone that it's been sitting at for quite some time. So certainly a very key level here for silver, and it needs to hold up. US oil, another one that people have been speculating on. Generally, when yields go up, oil goes up. You can see here inverse or double bottom is kind of the concept here, and no breakout of this area. I'd say it's on resistance at this point. But if fortune favors the brave, if it breaks to the upside, maybe the completion is interesting because that goes to 71.50 a barrel. Tesla, well done. Anyone that was taking this to 330. Does it open up 355? Certainly does. Trend is up. This is my first resistance for this breakout trend. And I guess it's just another one where technicals really rule here in terms of breakouts. And more importantly, it's not really about your opinion on anything. It's just about the flow. And the flow, of course, turned into positive gamma, and that pushed us towards 330 over the previous session. So well done if you've been trading that. What about semiconductors versus SPY? Well, you guys can see here that semis have been flying. This is because there's all these deals being done, like Saudi Arabia, like buying chips and chips being sent overseas and relaxation on chip sales and everything. And that's pushing semis through big time. And of course, a market that's being led by semis, in my opinion, is not a bad market. And of course, that tells you that if we do now get pullbacks, that generally the street will be trying to buy it up, at least for now, especially if nothing really changes and it's just the US 30-year taking us down. What about NVIDIA breaking through? 135 is the next positive gamma wall squeeze level. And at the moment, it's in an upward trend. So pretty big stuff there. And of course, the other Mag 7 stocks, we're all doing okay. Most notably, of course, Google, still pretty cheap in comparison to what some of the others. There are reasons for that, but again, some pretty nice fundamentals there. I shared some of those over on our X account, links in the description down below. Chinese market showing a little bit of overbought action as they come into their first major supply, but even during earnings, even if they fall, 22,000 is a key level, and I think we still remain bullish on China over the next 12 months, mostly because the market is still quite low when you compare it to where it historically has been. And you've got to remember, you've been in a boom and bust, which has been going on thanks to stimulus from China. When they start to stimulate an economy, they do not stop. So we expect them to continue to do that. In terms of US markets, US 2K at resistance. And of course, NASDAQ breaking through and continuing to rally up as it squeezes through some of these levels. Boy, oh boy, it's continuing to go up at this stage. But I think the big deal has to do with this daily 200. And we mentioned it's such a big indicator because when we break out in the fashion that we did, we open up a couple of things. First up, the daily 200 generally gets revisited in the future. And if you actually have a look at it, you're going to have a 200, a 20 moving average, a 50, and a potentially anchored VWAP and a few fibs, all sitting around that 20K zone in the future. And you might say, big deal. Well, it is kind of a big deal because markets generally do pull back to these levels. You can see over here during the February, January kind of period over here where it broke out. You can also see the 2020 period. It came back down to those levels. And you can see here during the 2019 tariff war stuff, we ended up coming back down to that level several times. So it can be an incredible zone to watch in the future. And if you go back through history, you'll see it's pretty decent in terms of statistics as well around that. Now, the next question is, could we actually see further sell-off? Could we go down to fill some of these other gaps? Certainly could. It's all possible. But for now, there is no reason to see bearishness just yet. We don't have enough dark pools after this announcement. We don't have any change of trend, but you've got to expect out of nowhere it could happen. And I think the thing here is that most people are now going to expect an all-time high. It's really the aspect up here that I'm worried about in terms of leverage. So I expect leverage to come back big time, and we'll be following that very closely in 2025. So stick with us there for that one. What about Bitcoin? Well, it was more about coin. You can see here the inverse head and shoulders coming through and pushing up as coin gets included in the S&P. And you can see here from Bitcoin's perspective, we're still right at that resistance, not making a new all-time high or new high, not all-time high just yet, but certainly at resistance. There are cases for bears to be trying to sell around here. I don't like to go against these trends too much. So obviously you want to pick your battles, but Bitcoin at resistance for sure. If you enjoyed today's video, make sure to subscribe. We'll give you a quick summary in a moment, but just remember our Sydney trading event, totally free to attend. It's going to be an awesome event. Make sure to come to it. And also a big thank you to our sponsor of today's video, which is Tiger Brokers. Remember, they've been winning tons of awards, and there's a reason for that. It's because they're constantly improving their platform. And that's the number one thing I always like to see, businesses that continuously improve, just like we do on this channel. We strive to always learn new things about markets and then share them together so that we can become more informed about what is an evolving marketplace. Thanks so much for watching, guys. And in summary, I think right now, the key is to not come from a FOMO perspective. If you feel like you sold some little early, or you feel like you're feeling like you need to be in the markets, just remember, single stocks now open up a lot more now that the VIX is underneath 20. Now that we've seen tariff de-escalation, that's a big deal for technicals as well and data. So it means it's less of a news-driven market. And I think all of these things point towards positive optimism there. And in general, there's always going to be another opportunity, whether it's in metals, whether it's in stocks, whether it's in indices, whether it's something else, always another opportunity. Thanks so much for watching, guys. We'll see you in the next one. Bye for now.